Good day. Ira Epstein of Linn & Associates with your metal market wrap-up, and this wrap-up is for Monday, August 2nd, 2021, and we're right now about 6:10 in the evening. I want to remind everybody, if you're on my mailing list, I sent an invite for this Wednesday's live webinar to you. If you're going to come, I'd recommend that you sign up early. Remember, you can always write me with your questions ahead of time. Your invite, when you register, the response that gives you your user ID and password has my email in it. Send me the question so I can prepare the charts. You can also click up here during this webinar, this particular video, if you will, and that will get you to the area to sign up as well. All right. It was an interesting day. The stock market went up rather sharply this morning. Ideas, of course, that the infrastructure bill in the Senate is going to pass. The market seemed to have at first shrugged off the COVID-19 cases that are on a big march to the upside. Now, the people getting ill, and I think you know this, are primarily the people that haven't had vaccines. The people that have been vaccinated do and can get the Delta version, but they don't get either ill from it or it's a very mild case. They certainly, as a group, are not going to the hospital. There's always exceptions here or there, but I'm talking the big numbers. So we also got to today, according to the White House, 70% of the people that can be vaccinated across the country are now vaccinated. That still leaves about a third of our population. We need them to get it done. Can't answer it more than that. Crude oil fell rather sharply on that news. Today down 3% because China is now seeing in 32 provinces throughout China that they are getting the cases really picking up in a major way, and that could shut down factories and the like, so we saw that. That all weighed late in the day on the stock market, and they ended up closing lower in many of them. We'll get to that when we do the financial update. Metals didn't fare well. Why? Because interest rates, the fear there is that interest rates keep rallying. And again, in the financial video, I'll cover that and show you where we're at. So we might as well go to the weekly area chart of gold, and you're fighting a battle right at that 18-week moving average of closes. You're under it for the moment at 1812.30, but for all purposes, that's your battleground. When you look at a daily bar chart, you can see the action here, and when we take it even further, you've got a pattern of a lower low and a higher high. That is not a trend. This is the downtrend line I drew for you last week. Unless the market gets back under this, I still expect this to be a broken downtrend pattern. As for where the market's fighting a battle, it continues to be between the 100-day average in green and the 18-day average. You did rally for one brief moment, knock on wood, because I had clients in my advisory services long in the gold, and I had told them you've got to be coming out against some key numbers, the Bollinger Band, 200-day average, and look what happened. Bingo, and right back down. That was all off a new pattern called a broken outside day. Now I'm going to do a video series on that. And in that video series, I'll show you how that works. And from that series, if you want to take trades based on it, risk-reward ratio. So I'll get that all done. I hope to have that done by the fall. That's not far away. You do know that. The fall's, what, 6-7 weeks away. So looking at that, so I see a market that's neutral. You got a lower low, higher high, hit the upper Bollinger Band, 200-day average, got thrown back, but haven't gone into a state of collapse, and momentum is sideways. Just simply nothing to do there. The gold-silver ratio still favors gold over silver, although the silver market slipping back on part of the ratio towards the 18-day average of closes, but as long as you're over that 70.88, gold should be stronger than silver. When you look at the silver chart, you also have a lower low, higher high. Unlike the gold, you didn't challenge any of the major averages up here. All you did is get back to the 18-day average, but you haven't reestablished a downtrend. You broke that trend right back here, actually. You had a pattern of lower highs, lower lows, and if you take out that high, you break that pattern. And when you did it, you went to that 18-day average and you just hung in there. That in the copper market, we have a lower high, a lower low. The market did not respond well today to the most bullish news it could probably get, which is looking at the copper miners in Chile as to what's, I believe it's Chile. They are rejecting the miners' offer for wages and threatening to go on strike. So if that should happen, well, in this growing up period where we're coming out of a pandemic in many parts of the world and trying to get our economies going, copper, you can't replace it. There is no substitute. So you'll need that. Yet the market is saying it wants to head down, maybe back into the support. Don't fight the chart. Let it do its thing. Don't get caught up in news. Trade the chart. The chart knows more than we do. Maybe there's a miners have made another proposal that's been accepted. We don't always get the information. The chart has it. Somebody out there knows what's going on. Doesn't mean they can trade well, but they know what's going on. When you look at the slow stochastics here, you're just playing in the platinum in a market that's oversold. Still in a downtrend, but the oversold probably is not attracting new short sales. And in the palladium market, this is a contra-trend rally up to the 18-day average, where it should run into some pretty stiff resistance between that and the 100-day average of closes. Now, eventually, the palladium market and platinum will probably get bids in them when the automakers really gear up again to make cars. We hear the chip shortage is ending, but I haven't seen it ended at this point in time. In the dollar index, anytime you get to the lower Bollinger Band and you're not embedded, I teach in the enhanced Bollinger Band course what to do. I think the pros covered their shorts. And at the end of this video, you'll see that I've got that enhanced Bollinger Band course, the ad for you. It's not expensive. We're talking $75, 13 videos that teaches you how to work within this. And it's something that, it's one of my favorite courses I've ever done. And it's something, if you were to ask me the one thing I would do as a trader, it's what I teach in that, if I had to do just one thing. Last, in the Ethereum, higher lows, higher highs. You know you don't stay over the upper Bollinger Band very long. Correctly called the turnaround in this market when it got up over here. It broke the downtrend right there. You took out that high and that was the end of the game. Again, the most simplistic of things, lower highs, lower lows, break the pattern, you're out of a trend. Now, did it ever establish an uptrend? It certainly did. Higher lows, higher highs, but it also hit its topside objective of the upper Bollinger Band, and it's fighting a battle at that number. Okay, I bet it won't stay over it very long. That's the nature of what that algorithm does. So, take a look at this, learn a few things. I think you'll find that it sticks with you whether you trade spiders, ETFs, stocks, or my favorite, the futures markets. You have a good day.